Hi everyone, welcome to the Real Estate Red Zone, brought to you by the Texas Real Estate Research Center at Texas A&M University. I'm Haley Reeder-Wiley, Communications Specialist. Today is Wednesday, November 17th, 2021. On this day in 1931, the Delta Drilling Company was founded in Longview by 4 immigrants and a native Houstonian. 50 years later, the company, headquartered in Tyler, was one of the largest land-based private contract drilling firms in the world. At its peak, Delta operated 59 domestic drilling rigs and 6 foreign onshore rigs. But an industry-wide economic slump sent Delta into a long trough. In 1989, the firm, then called Delta US, filed for Chapter 11 bankruptcy, but emerged a year later under its original name. It owned 35 land rigs in East Texas, South Texas, the Louisiana Gulf Coast, and the Appalachian region. Now on to today's podcast. Housing affordability has been an issue for years, but it has been worsened by the COVID-19 pandemic as demand shot up and supply remained constrained. This can be seen in the third quarter 2021 Texas Home Price Index, which showed double-digit home price appreciation in all metros examined last quarter. Texas Real Estate Research Center lead data analyst Joshua Roberson is here to share his insights. Thanks for being here.
As always, I'm glad to be here.
What overall trends were seen in the latest Texas Home Price Index?
So, in this latest quarter, what we're seeing is that the home price growth that started with COVID essentially, it is slowing down, which it was going to happen because price growth of this nature just can't be sustained forever. So it is showing signs of weakness. However, for the time being, while price growth is slowing down statewide and in the big metros, it's not slowing down at the same rate that it accelerated up to. So it's kind of a stubborn slowdown. In Austin, we're still seeing home price index growth year over year in the teens. So, actually, no, it's higher than that. I'm sorry. And so, anyway, it is slowing down, but it's so far very, very gradual. So,
what has pushed the double-digit repeat sales home price growth observed in the last 3 quarters?
The last 3 quarters is just continuation of the year before. You just have the perfect storm of demand and, lack supply. Supply was an issue even before COVID. For various reasons, supply just did not match demand in 2020. A lot of it simply because of COVID and a lot of uncertainty, but with low rates. And of course, now looking back, we now know we previously underestimated the demographic shifts of millennials, forming households, families, and so there's a practical need for space. And, we're also starting to get data about a lot of in-state migration, particularly from California. Shouldn't be a surprise in the sense that California is the largest state. So, but this past really not season, but 2020, 2021, it's been uncharacteristically high even for California. So just a combination of those factors, low rates, demographics, people moving to the state. And, right now, and this kind of contributes also to the kind of slowing in price growth, but 2021, we have seen listings come back online. 2021 is starting to look closer to priors in the sense that, we're getting seasonality back. So, some of the numbers, whether it's the home price index or any other kind of housing metric, might look a little funny kind of closing out the year because last year we were still very much foot on the pedal going into the fourth quarter. Whereas this year we're kind of getting back to a normal selling season where summer is the big time and then the other seasons are, relatively slower. So anyway, just kind of recapping demographics, low rates, and those are definitely the big items pushing price growth.
What are some possible solutions for housing affordability in the existing home market?
Wow. Well, many elements are still the same in the sense that, like, pre-COVID, we had limited supply, particularly at the affordability price range. Today's, quote, entry-level home is not the same as yesterday's, or rather even 10 years ago, if you adjust for real dollars. There was a time where entry-level homes, you could be bought in the hundreds, and that's just not the case right now. And so what homes are available in that price range, you see really intense markets with months inventory well below a month. So those aspects have not changed. COVID did not make that any better. In fact, in the time being, it's gotten worse. But I mean, I guess in the short term, since we're asking about right this moment, I mean, we do have various supply chain issues. There's many anecdotal stories about how, if you're a home builder, you don't even have the option of buying a thing, whether it's windows or appliances. You don't even have the option of buying it at a higher price. You just kind of go without in some cases. I think the other day I heard builders, instead of buying appliances at wholesale, they're literally just going down to Lowe's and buying them for retail. So just kind of doing whatever can be done to work around the current supply chain issues. And of course, you think of all the things that go into building a home. Any one thing can kind of throw off or delay a project. So I'm sure that many people listening have experienced that if they looked at buying a home, or building a home rather. Well, and even in the remodeling space, you hear stories similar to that. So in the current environment, working around that, because that's making prices go up just in general, but kind of more long term, I mean, we're still looking at kind of the same elements behind home price or home affordability issues. Lack of supply and affordable land prices are still going up. So a lot of the same themes, but current supply chain issues making it a little worse in the current moment.
What should we expect to see in the fourth quarter and beyond for home prices?
Yeah, so I touched up on this just a little bit. Fourth quarter this year, we're already seeing sales kind of slow down, but that's, again, any other year that would be normal. So people, as they kind of focus on the holidays, of course, we're right in the middle of school season, so I think we'll kind of start seeing more return to normal in the seasonality pattern. In terms of price growth, jury's still up in the air in terms of how much home price growth will go down. Again, we added a lot of people to Texas past couple of years, and in fact, if you look at the redistricting data from the decennial census, it turns out for the past 10 years we've been underestimating Texas population growth, and so there was a pretty big correction on the decennial census. So I mean, there's still a lot of people moving to Texas. Some of it will slow down again. Not every year we're going to have record-breaking, numbers from out of state, but for the most part, we're still, we still got strong demographic growth. So I mean, and that of course is going to be a positive for home price. So we do expect, again, home prices to slow down. The current rates are not sustainable, but in terms of, are they going to look a lot like 2019, or is it going to be somewhere in between? That's kind of hard to tell at this point.
All right, well, thank you again for being here.
As always, thank you.
Thanks again, Josh. For more, check out our Texas Home Price Index, which measures price appreciation changes for residential single-family homes. Coverage includes quarterly indexes for the Big Four Texas metropolitan statistical area markets of Austin Round Rock, Dallas-Fort Worth Arlington, Houston The Woodlands Sugar Land, and San Antonio New Braunfels, as well as for Amarillo, El Paso, and Sherman Denison. Check out the data series by clicking the link in our podcast webpage or in the YouTube description box. For more housing data, check out our Texas Housing Insight Report. This monthly report is a summary of important economic indicators that help discern trends in the Texas housing markets. Read the publication online for free and subscribe to email notifications so you always know when the latest report is published. The fall 2020 issue of TG Magazine is out now. To get a digital version you can read conveniently on your mobile device, subscribe to our email list. The digital version of TG includes everything you've come to love about our flagship publication in an easy-to-read, mobile-friendly format. The link to the email list, as well as past issues of the magazine, is on our podcast webpage. And while you're on our website, check out our research library. It includes a wide variety of research reports and articles. Latest topics include public improvement districts, a Texas border economy report, an insight on the Texas housing frenzy, the new quitclaim bill, our weekly leading index, and more. The link is on our podcast webpage. That's going to be it for today's podcast. If you're looking for more from the Texas Real Estate Research Center, head to our website. That's www.recenter.tamu.edu. There, you'll find the latest data, research articles, blogs, news, and more. For more Texas real estate news, subscribe to Recon, our biweekly newsletter. You'll get all the biggest stories sent straight to your inbox every Tuesday and Friday. The link is down below. To stay up to date on when articles are published on our website, follow the Texas Real Estate Research Center on social media. You can find us with the handle @RECenterTX on Facebook, Twitter, LinkedIn, and Instagram. For more podcasts like these, you can subscribe on iTunes, Spotify, or to our YouTube channel. All podcasts are also available for free on our website. Thanks for joining us today in the Real Estate Red Zone, brought to you by the Texas Real Estate Research Center in College Station, Texas, where we've been helping Texans make the best real estate decisions since 1971. This is Haley Reeder Wiley, and I'll see you next time. Bye!